I noticed that Google was trading outside of the standard deviation on the Bollinger Bands and is well above the mean. Combining this with the macro headwinds, I was thinking about buying puts with an expiration date of October 20th. Is this a good move? So there's a couple of things that are interesting about that time frame. One, between now and October, there will be volatility. There will be the summer doldrums, but let's analyze a couple of things. One, let's look at October options. So I had a quick look at the money. So Google is trading exactly just under 125 right now. The calls for October are $10, which means you need Google to be at 135 by October to break even. And the at the money puts of 125 are $1 cheaper at $9. That means your break-even point is 116. So you need Google to go to at least 116 before you can even start to think about making money. Of course, volatility drives everything else, and the implied volatility of Google is 26.1. We'll be talking about a lot about implied volatility today. I should have called the video implied volatility, but we'll see why. Now let's look at the chart and what you're talking about. This is the Bollinger Band for Google, and you can see we are way, way, way outside that Bollinger Band. Also, you can see some other indicators there too, like buy and sell signals and everything else. So yes, correct. We are outside that band, which typically means the price is overbought. But there's other things happening in the marketplace right now. Now let's look at the layer out model here. This shows you, it's funny because we are bouncing off that 125 level, which is resistance, which is a time to, for the asset to take a breather before it tries to climb to the next level, or simply be rejected off the 125 level and mean revert to the 115 level. Coincidentally, that's exactly how things are priced right now for the options. The 125 level is at layer 7 in the layer out model. It has 10 layers. There are ones that are a lot higher. And again, this is based on the actual volatility of this actual asset. And it's fun to use this model to tell you exactly where things are and how confluent typically resistance and support levels are. So this will give you an idea as well. Looking at layer 6, if you bought your put option for October at the money, you'd want Google to pierce layer 6 before you can even think about making a profit. So that's important to know as well. Let's look at one other chart. Let's look at the signals of, is Google going to turn down? This is looking at a thing called IADSS. So first of all, at the bottom, the mean reversion, you can see it's way overbought. It's way off the charts from where it normally lies. A red dot will be coming soon. It's not there yet. When the red dot comes, it typically means it's going to turn down. Then you have the sell signal. It's light red, which means the sell signal is coming. This is on the daily chart. So it probably will turn down in the near future, but the trend is still strong. And that is the only thing kind of keeping us on the fence right now. But sometimes it takes the trend, especially on the daily time frame, a long time to turn around. So that's why we look at the 4 hour and then the 1 hour and then the 15 minutes. And that helps us dial in exactly when to get out of the position or go short, etc., etc. So with that, there's a couple of things we have to take into account regarding Google. One, it's an AI play. And you can see, as I said, I think yesterday, crypto is tired and AI is wired. If you look at the searches for AI on Google, obviously nobody's looking for a metaverse. Nobody really cares about Bitcoin. It's at like a low level now since, last time I hit this level was kind of November 2022. And before that, we got to go all the way back to 2020. Again, even seeing the vibe at the Bitcoin conference is like, nothing like it was a year ago. So, but AI is red hot, and this can inflate assets to a certain level. In fact, I started analyzing yesterday PEG ratios for all the top AI stocks to see which one is the cheapest. And a very interesting name came out by the name of Tesla. If you want to play AI, it is the cheapest name out there compared to others. And another view is NVIDIA. The price is preposterously puffed up. You can see here the price to earnings ratio is 182, 189 actually at one stage on Friday. And the price to sales is over 29, call it nearly 30, which is insane. We're back to dot-com bust levels of October 2000. So it is kind of insane to see. So the problem is, because the narrative is so strong and it can inflate assets so high, way beyond where they should be, this means you could be in danger buying a put on Google. If you have a long position in Google, I much prefer the strategy of selling a call, because then you can always roll up and the money's in the selling. And remember, the final point on this one as well is the markets can stay irrational longer than you can stay solvent, from John Maynard Keynes, top economist. So with that, I would not buy the put at $9. Yes, you might make a little bit of money, but I'd wait for more of a spike and get more pricing action and then sell a call.